In this video, I want to share with you some information about LandBridge and Texas Pacific Land. I will walk you through this letter from Horizon Kinetics. This is the latest letter, fourth quarter commentary released on January 2025, and they are big shareholders of TPL. They are big shareholders of LandBridge. In fact, they own more than 30% of LandBridge shares. If you check their portfolio for this fund, Horizon Kinetics, you will see that half of their portfolio is TPL. And they've been investing in TPL for decades, for at least 20 years. And Murray Stahl is one of the best investors. He spotted TPL back in the days and just held and held. And you maybe know it, there is a company very similar to TPL that has become public in summer 2024. And it turns out that the same fund worked with the IPO, and they were maybe the first shareholders, one of the first shareholders of LandBridge, and LandBridge is their third largest position. This is 3% of their portfolio. I mean, LandBridge is a small company, so you can't own a big chunk of a company with billions of dollars. So it's normal. It's a fund with a lot of allocation towards lands, infrastructure, asset-light business models, and a very high margin business. So in case you want to get more information about Horizon Kinetics, their funds, they are also invested in Bitcoin and other royalty businesses. The fund is public. You can just type this name, Horizon Kinetics. You will find some interviews, some letters. So, okay. And in the latest quarter, they talk about AI, they talk about tech, they talk about electricity, they talk about energy demands, and there is a pitch, an explanation why they own LandBridge and TPL, some formula, some tables, and the goal with this video is I will explain the situation, how they explain things so that you leave this video with some value. If you are hesitating to invest in both businesses, you will have the answer by the end of this video, if that's good for you or not. So, okay, let's me start. The letter is 20 pages long, 30 pages long, but only a few pages are dedicated to TPL and LandBridge. So I will not talk about everything. Okay, so we can start. In case this is your first video from this YouTube channel, welcome. My name is Christophe Nour. I've been investing in the stock market for almost a decade now, and I have achieved the performance of 25% per year, including the investment in TPL. So I have invested in TPL since 2020, and now I'm a shareholder of LandBridge. So, okay. The first pages of this letter are about the tech market, the high valuations, what is happening. The world is becoming more AI driven, and they explain, okay, what is happening with the market right now. It's a very interesting letter. They talk about valuation, they talk about Microsoft back in the dot-com bubble, and they talk about energy. Okay, let me zoom in so you will have more visibility here. They make a transition with tech, with electricity, with data centers, that with the facts basically. They talk about Microsoft and their investments, $80 billion in data centers for the future. So just for 2025, they plan to increase massively their capex for data centers, for electricity. They say a few days after this, you have this big Stargate project of $500 billion announced by the Trump administration with Masayoshi Son, with the Oracle, Larry Ellison. I mean, you have a lot of big names investing in the future of AI. You have Mark Zuckerberg and Meta Platforms willing to invest $65 billion in capex. And as of I'm recording this video at the beginning of February, we've had the results of Google, Alphabet, and they plan to have $75 billion worth of capex to boost AI because they have a lot of demand for their products, for their services. So definitely the Magnificent Seven is investing massively. You have a lot of demand for AI, infrastructure, and energy. So you have some press releases here. And what do they say in the letter? The following page is a word about DeepSeek. You probably know that there is a Chinese ChatGPT, and apparently you can make a low-cost ChatGPT, low-cost AI, and this is the reason why the stock or Nvidia stock tumbled a lot, fell a lot, because apparently you don't need as many chips to build AI. Okay, so maybe that's a worry. Maybe there is a hype with AI and the tech stocks are overvalued. Let's see what they have to say. DeepSeek, a few words. In an expected call, somebody from their clients from this fund talked about the Chinese AI model, but they were already aware of this. And this was not big news. I mean, they've been working on the Chinese ChatGPT for some weeks now. So strangely enough, it spooked investors, but the information was already public. And China has been working on this low-cost ChatGPT for some time, and still Meta and Google, now we know it, they were aware of this, of the Chinese infrastructure, the Chinese development, and still they upgraded their guidance for capex. They were aware of this development, that you can build the cheap stuff, but still they boosted their capex for 2025, and they said it will even increase in 2026. So regardless, they plan to build massively. They increased their AI spending, so they did it anyway. And they said that the fact that AI can become more efficient, you can create better models with a lower amount of resources, means that you will have a lot of efficiency in the AI world. And that might even be a greater boon to AI spending. Now, smaller players can play AI. And if you sum things up, you will have more demand for AI. Small guys will be able to be in the AI race. So this is like the gold rush, and mining gold has become cheaper. A lot more people will try to get gold, and in this situation, it raises the question: where do you invest if you plan to make money in the stock market? If you have a gold rush, maybe you can sell shovels and make a fortune. And this is their transition to TPL and LandBridge, but let me scroll down a little bit. The data center growth phenomenon and its claim on power and water resources was already in place before the new chip from Nvidia. Basically, they show you some stats showing that there is already a lot of demand when it comes to AI, infrastructure, cloud, blah, blah, blah. You see the charts for the past 10 years. This is the annual spending on cloud IT infrastructure worldwide, up and to the right. The second chart is the enterprise spending on cloud and data centers by segment, up and to the right. And the third chart is the IT spending on data center system worldwide, up and to the right. You see more demand, regardless of ChatGPT or not, regardless of China or not, you see more demand because the world is becoming more digital. Okay.
By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of the video.
The old refrain, okay, I like the title. So this is happening. We know it, we have the facts, regardless of the new Nvidia ChatGPT stuff. The trend was long-term and the trend was here. It's just that the trend is accelerating right now. The AI spending is accelerating. So how to invest without having to feel lucky? The old refrain here at Horizon Kinetics Central is that the best way to earn money from new world transforming technology is rarely in the technology itself. That's true. I mean, if you had invested in computer technology in the 60s, you would have maybe lost money. Technology like the light bulb, the radio, television, car manufacturing, the airlines, I mean, these are terrible businesses. It's like if you rush to mine gold, you don't find gold. But if you sold the picks and shovels, you made a fortune. So that's their philosophy. And that's the reason why half of their portfolio is into TPL. Rather seek out a business that in some way is necessary to or enables the technology developers to do whatever they will do, which is a winner and different, and which is a long-term fee collector. Yeah, maybe you can invest in Meta platforms, maybe you can invest in Google, maybe you can invest in Nvidia, maybe you can invest in KLA Corp, Applied Materials, or you can invest in a company that owns lands and that will win regardless of who is the big player in the AI race. So this is the investment thesis about LandBridge, and in the following pages you will have more numbers. Okay, now they say thing one, they talk about natural gas. They talk about the growth of energy needed. So the Lawrence Berkeley National Laboratory in an analysis talk about the US data energy consumption for the past 10 years. Basically, in 2018, data centers accounting for 2% of total US electricity consumption. Okay, and now as the world is moving more digital with COVID, etc., in 2023, they increased to 4% of the national total. And the expected range for 2028, just 3 years from now, 2025, is between 7 and 12%. This trend is accelerating. You will need more energy. And this is also what all the magnificent 7 companies are telling us shareholders. You need more energy. You need more investments in AI, whether it's nuclear energy, solar energy, liquefied gas, oil, anything. You need a lot of energy. It takes a lot of resources to fuel this digital world. They talk about the electricity end use that has been stable. You need to be more efficient. Okay, very well. Let me skip this for a while. And they talk about the renewable energy consumption in the US. And they say that renewable energy will not be enough. So renewable energy that includes hydro and biomass is roughly this amount. That means that solar and wind, even if they were feasible from the always-on power reliability perspective, would have to double in the next few years to provide the anticipated power need. Yeah, if you bet on renewable energy, you make a bet that they will increase tremendously over the next 5 years, 10 years. And if you look at the past 5 years, renewable power volume increased by less than 10%. So, as we say, the past, strangely enough, is a good indicator of the future. And the renewable sector is not very promising if you look at it that way. So, the pathway is thermal power. This is what they say, which means nuclear and fossil fuel. New capacity from coal is socially and politically prescribed. Yeah, nobody likes coal. This is also what Monish Pabrai, the best Indian investor, is telling us. Coal is a banned word. Oil is used minimally in electricity production. Nuclear power, as Microsoft demonstrated, will have a role, but the timeline for developing new capacity is a longish one. Yeah, it takes a lot of time, many years to build a new nuclear power center. And they need to be nearby. I mean, geographically speaking, that's a mess. And it takes a lot of time to build a new station. So maybe it's the most efficient way to generate electricity in the future. But I mean, the horizon on time, I mean, you need the AI usage now. You need the demand now. You need to invest now your money. That leaves natural gas, which in general terms is plentiful and cheap, and for which generation equipment is likely available. So yeah, basically a lot of natural gas will be used. That's a good alternative to fuel this AI race. So they talk about the investments, Trump and the Dubai billionaire investing in future data centers. I mean, with Trump as a US president, I'm expecting a lot of press releases, tweets about future investments. We will see if that works out. They say that in the S&P 500, a tiny part of the index is related to energy, and in the future, that should be higher. That's their bet. I don't know if that will be the case. But nobody knows actually. The second point I want to highlight is water. Don't worry, I know you clicked on this video for LandBridge and TPL. That will be the conclusion of everything, because I mean, these are the most expert guys on TPL and LandBridge. So maybe it's worth it to listen to what they have to say. Regardless of the metrics, PE ratios, etc., just the rationale for them to invest in LandBridge and TPL. So don't get discouraged. You need maybe to take a step back, look at the big picture of what is happening. So they talk about natural gas, most efficient way at the moment. It's rapid, it's fast. You will need more gas. The second point is water. So they say basically data centers need a lot of water. As much as a data center requires a utility scale supply of electric power, it requires a utility scale supply of water. The water is partly for cooling the servers. It's a lot of heat. And the water is also required for the electric power plant, just as for any thermal plant, power plant, including nuclear. Yeah, you need a lot of water to develop this big infrastructure. And you see that, I mean, they talk about the power usage effectiveness that has been stable for the past decade. Okay, very well. And what did I highlight? The water at scale is not necessarily so easy to locate. Yeah, to build this big infrastructure place, basically you can't do this in Manhattan. You can't do this in New York City. You can't do this in big cities. You want to invest in these big data centers, water infrastructure, where nobody will see them, when you have a lot of unpopulated lands, when you can make noise, you can pollute their inhabitant without any population over there. So yeah, and water at scale is not necessarily too easy to locate. Population centers don't want data centers, not for the noise, the higher electric bills, nor the higher water bills. Yes, absolutely. So you want a remote area to do the data center, to have your data center. So they talk about this, the wind, okay, very well. In the indices, they talk about water. Strangely enough, they are very big proponent of water investing in water bets, water investments. Yeah, we will see in the next decade if it works out. And now here is where they talk about LandBridge. Okay, so you clicked on this video for this reason. They talk about LandBridge. They say, yeah, LandBridge has some lands in Texas. They have the gas, they have the water, they can build infrastructure over there. And they mention a few metrics, a few figures here, the data description. They talk about the brackish source or groundwater that is sold to the big oil companies. You need produced waters. I'm making this video for people that know the thesis already about LandBridge and TPL. So basically, to drill some oil, you need a lot of water. And as the technique to drill oil is getting more complex, you need even more water. So the water usage is even higher and higher and higher. And also, LandBridge said that it recently signed a multi-decade lease for 2,000 acres, as yet vacant, at an annual rate of $4,000 per acre. Okay, very well. And the lease agreement includes an override or participation in the value of the electric power sold to the data center. So you lease some of the lands and you take a royalty out of the infrastructure, the electricity play. Local natural gas-based electric power can be produced at around 2 cents per kilowatt and sold to the data center at about 0.08, basically, for a spread of 6 cents. And out of this small spread, out of the electricity infrastructure, LandBridge will receive a 5% royalty, 5% of that spread. So what do they say? Do they say something before? They say no, the lands are more scarce and scarce and scarce per capita. So you sum everything up about the potential recurring annual revenue that you can have annually for LandBridge. You sum the electricity, you have the spread, 5%, the lease, etc., the water, what you can say, at which price of a barrel, and that gives you, for 2,000 acres of land, that gives you an annual revenue of $87 million for just this small part, 2,000 acres. And if you divide this by acres, that's roughly $44,000 per acre. So, however inexact and preliminary these figures are, using estimations based on limited information and operating experience, the revenue per acre figure is very large. Even arbitrarily reducing it by half, you cut in half to be conservative, to $20,000 an acre, it remains huge. Do they mention the number of acres like that LandBridge has? It has like 280,000 acres. Let me check. Let's say this. No acres. Okay, here we are. Oh, they talk about this later. So LandBridge has almost 300,000 acres of land. It turns out that some of these acres are very profitable, some of them are completely useless, and they do this exercise just to have a sense of the valuation, the potential revenue run rate that the company can have. Okay, so let me continue with the explanation. I hope that's clear for you. Basically, they try to guesstimate what will be the annual revenue for these lands. And even if you cut in half the revenue per acre, this is huge. And you say, yeah, maybe this should be higher. LandBridge has made multiple acquisitions in the past 12 months. Basically, LandBridge has been created, officially announced in 2021. They've been public since July 2024. And since July 2024, they took on some debt to do some acquisitions. So they diluted a little bit the shareholders, did some acquisitions with some debt. Okay. And the acquisitions they made, the goal was to have even more lands and more lands. So LandBridge has made multiple acquisitions at prices generally ranging from $2,000 to $5,000 per acre. Always compare this with the potential revenue per acre they can get. It would seem that the water and other resources it can deploy on that land enhance the value considerably. The stock market value of LandBridge is $6 billion. As I'm recording this video, the stock price of LandBridge has dropped a little bit in the 60s, $65 per share. So that amounts to $5 billion. So maybe you want to lower this estimation for your own formulas. So they say its market cap of $5-6 billion relative to its acres that they own. It's priced at $20,000 an acre. That's more or the same figure as the quasi-permanent yearly data center revenue expectation per acre, as guesstimated above, and if you have a margin of safety of 50%. So basically they say that for the small part, the data center part, they are valued at 40,000. I can generate a revenue of $40,000 per acre, and the value at the moment is half of this. So they maybe say that the stock is undervalued by 50%. Yeah, that's a lot. So if you are conservative, you can say, yeah, this is cheap or fairly valued. What valuation multiple, if not 1 or 0.5, should be paid for a perpetuity-like royalty rental stream? If you have these assumptions and you think that the land will be developed in the future, in the next 5 years, maybe the stock is extremely cheap. These valuation differences illustrate the higher, better use possibilities that inhere in land. That has manifested in TPL, Texas Pacific Land Corp, repeatedly, even in only the past decade or so. Yeah, maybe you say, yeah, maybe Chris, the forecast is very optimistic for LandBridge. Is trading at an expensive price, maybe fair price. I'm not sure about the forecast. These guys know TPL. These guys know Texas Pacific Land very well, and they've been holding for decades. And over time, it turns out that TPL has discovered new ways of making money, because TPL owns the land. TPL, for comparison in terms of size, Texas Pacific Land owns around 900,000 acres of land, so 3 times more lands compared to LandBridge approximately. And over time, the technique to drill more oil has developed. It has become more complex. And as the technique to drill more oil has evolved, the royalty revenue has evolved. So TPL is making more money, something that we couldn't think of 20 years ago. Somehow, because of new technologies in this Permian Basin, somehow TPL is getting some surprise money, surprise revenue coming out of nowhere because of new technology. And there is a strong guess that LandBridge will have the same phenomenon. Now you may say that LandBridge has a lot of expectations and okay, but it can get better than this. Something that we haven't thought of. So they mentioned these new developments of new revenue for Texas Pacific Land over the past decade or so. First came the drilling technology advancements that in 2013 suddenly made the vast but deep oil and gas reservoir in the Delaware Basin economically feasible. So that was for Texas Pacific Land. A stream of royalty revenue became a river. With increased drilling activity, the provision of source water likewise expanded from less than $12 million in 2013, buried with the easements and sundries category, to more than $100 million 10 years after this in 2023, and an annualized rate of over $150 million through the first 9 months of 2024. Something we didn't think of at the time, and now it's becoming a very large revenue stream for TPL. Something new that came up. As well as depleted and were drilled deeper, the ratio of produced water to oil expanded, created demand for water recycling and sequestration. Produced water royalties now exist and exceeded $100 million. An additional revenue stream, water, for TPL. And TPL created this new segment about water in 2016, 2017, and it has developed double digits every year. They grow more than 20% every year. The margins are very high. This is a new revenue stream that came out of nowhere. The same thing can happen to LandBridge. Improved drilling technology has enabled lateral, so horizontally directed, well length of 1 mile, then 2, and they're now pushing 4. That makes the square mile sections of the checkerboard pattern in that region more valuable, especially if they can be combined into larger contiguous footprints so that drillers don't need to stop at the end of a property line. The trend to electrify motors and engines in the oil fields has led to wind, solar, and other installations that increase easement revenue. Additionally, if you need to build more infrastructure, you will pay a royalty to TPL. You get an additional revenue stream for TPL because you build more stuff, more warehouses, more bridges, more homes, more factories, anything. If you build more stuff in the same land, TPL will get a royalty. Same thing with LandBridge. And now the owners of the cutting edge technology of the day, AI, have urgent and substantial need of a specific portfolio of resources that further increase the value of the same land. The checklist, sitting away from population centers. Texas is great because you have a lot of unpopulated areas. The availability of abundant natural gas in close proximity, there too. Perfect. Texas is perfect for this. And the availability of abundant water and water handling infrastructure. It turns out that LandBridge does exactly this. LandBridge and TPL does exactly this. And then they talk about something specific, but that's minor in the explanation, but let me go through it. Also, they say that some people say TPL has a high PE ratio, LandBridge has a high PE ratio. These two stocks are expensive. And they say, yeah, maybe they are expensive, but as you saw 1 minute ago, new revenue streams can come. So you are paying a little bit premium to this unexpected revenue stream. Like, don't bet against this development. And secondly, you have some revenue streams that don't show up in the income statement. However, there is something that can't be measured by an earnings multiple, revenues that haven't arrived yet. TPL's earnings, for instance, don't include revenues on substantial natural gas production volumes on which it should be paid royalties. No one is cheating TPL. It's just that the price to sell gas at the Waha hub in the Delaware Basin has been negative for much of the past 2 years due to insufficient takeaway capacity alongside rising production volumes, even as the national price has risen. Basically, the cheap price over there is cheap. You have negative price. So if you have a negative price, you don't have any royalty revenue. You need the price to go back up so TPL can get a royalty revenue. So if you only look at the income statement, this segment doesn't produce any revenue because of the commodity prices that is negative at the moment. But someday it will reverse back. It will not be at a negative level forever. Or maybe, that anything can happen in this world. We had a negative oil price in 2020, so anything can happen. But they think, Horizon Kinetics, again, the experts on the topics, think that this will reverse back and you will have a positive price for natural gas. So you will have an additional revenue stream, more royalties for TPL. Okay, what did I highlight for you guys? Okay, I believe that's the end. They talk about AI, infrastructure, Bitcoin. In case you are also interested in Bitcoin, well, they have some things to say about the supply. I mean, they are big investors in Bitcoin and the future development. So basically, if I have to sum up, big energy, a lot of energy demand, big Magnificent Seven companies are in the need of more infrastructure, more capex, more energy. You don't have the time to build nuclear plants. Renewables energy will not be sufficient. Coal energy, that's a banned word. For oil, not that great. So you need natural gas. Where do you have natural gas? You have a few states in the US where you can do this, and a lot of data centers are built over there. But Texas is a prime state to have this because you have a lot of unpopulated lands. You have these infrastructures that are here available for you. They have the technology over there. They have the means. You have a lot of lands, a lot of resources. You can make as much noise as you want. You can build as much factories, infrastructure you want. And TPL and LandBridge will be here for you to welcome you and make a deal with you. And this is exactly what is happening. I mean, LandBridge is a small company that has been public for less than 1 year. The stock has been here for less than 1 year, but they already has a contract with one data center. And I wouldn't be surprised in 2025 if we sign other deals with the plant of other data centers in the future. They think you have a large potential, and this is the reason why TPL is their biggest position in their portfolio. It's a buy and hold. And you have a Grayscale, you have a Bitcoin investment. That's their, that's 1% of their portfolio. The second biggest investment for them is LandBridge. That's 3% of their portfolio. Let me check this. Oh no, never mind. Okay, never mind. TPL, if you look at this portfolio, it's half of their portfolio. That's TPL. Then they have a Bitcoin investment that's 11% of their portfolio. And the second stock of their portfolio, Horizon Kinetics, is LandBridge, which is 3% of their portfolio. And again, I mean, this is a large part. They are big owners of LandBridge. So, I mean, this is a great letter. You can check their website and read it again if you want to. And I hope this video gave you some value and give you some information about how LandBridge and TPL plan to be the winners, regardless of who wins the AI race, regardless if it's NVIDIA, AMD, or other players, Meta, Google. I mean, the infrastructure will be built. So LandBridge and TPL are almost certain to make a lot of money. And if the AI race is getting stronger, is accelerating, TPL and LandBridge will make even more money. So basically, this is the plan. And you just have to pay a good multiple, a good price, and hold for a few years.
If you like this content, I have an investing coaching program. In this program, you will learn a complete investing process. You will learn how to find good stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio. Additionally, you will have access to my personalized guidance for long-term results. We will do weekly calls where we analyze stocks together, and you will have access to my private number available 24/7 for full support. If you are blocked, if you have any questions, I'm here to help. Click the first link in the description to get more information. You will get a video that explains how everything works completely for free. No need to sign up, no need for your email address. Just click the first link in the description and I'll see you on the other side.